Hello traders and investors, welcome back to the Trend Trader YouTube channel. Yeah, no, we saw on Friday that the market was on fire. So many of us had, for some of us, our stocks didn't perform well on Friday because there was a global meltdown in the stock market. That meltdown is kind of related to the new coronavirus variant, the variant that South Africa claimed that it discovered, and therefore now that variant is called South African variant. But yeah, there's a new variant within the coronavirus space. Well, we don't know how the impact of that new variant is going to be. We've already had coronavirus since forever. Now we are living with it, but yeah, this new variant, it seems like it caused a panic in the stock market, which is what I want to cover today. So the first thing that I want to cover is that we saw that market meltdown on Friday. The Asian market performed poorly, and also when the JSE opened, there was some carnage. Most of the stocks just opened lower. Some stocks even broke key support levels. But long story short, at this very moment, there's panic in the stock market due to the coronavirus. So we need to be aware of that. My view in that sense is that, we've been living with a coronavirus for a while now. I'm not saying that we shouldn't panic, but we already know that there exists coronavirus. Businesses are finding a way to survive with the virus. Countries are finding ways to survive with the virus. So now we don't know what's going to be the government response to this new variant here in South Africa and globally. Besides that, some countries have decided to shut the doors to South Africa once again. Well, that's a bit sad, especially for those that were planning to go on holidays this December. But yeah, that's just that thing. There's a global meltdown at this particular moment due to the coronavirus. So now I want us to look at the stock market and it is what can we expect from it. So we saw last year, 2020, when we first had a case here in South Africa. That was around March, but also around about that time in Europe, a lot of countries were struggling to deal with the virus. I don't know what triggered the market meltdown in the US, but here in South Africa, we can almost say that our market meltdown around March, it was triggered by the cases that were reported in South Africa. And then around about that time, globally, the stock market, they crashed. Well, so far, we can't say that they crashed. So far, it's just a little bit of panic. We don't know how severe it's going to be. It has just been one day, right? So if we look back what happened last year, the stock markets, they did crash. And then they recovered eventually. I don't remember whether they just recovered within a week, but I don't think that it took a month for the general markets to recover, right? So now we need to differentiate between the stock market and individual stocks because, well, if you want to buy the whole general market, you normally buy an index tracking ETF, right? Then you have exposure to the general market, whether you are tracking the JSE Top 40 or the capped all share index, or you're tracking the S&P 500 or Nasdaq 100, Nikkei 225 in Japan, whichever index that you are tracking, that's how you're going to get exposure to the full market. Other than that, you will be picking few stocks, however you pick those few stocks, right? So we have that general market. The general market is like a supermarket, and then individual stocks are like products within that supermarket. Some products are going to do better than others. They will sell much better. Some won't sell as fast as other products. But overall, if the supermarket is able to sell some product, we can expect that in the long term, the supermarket is going to perform better. It's the same thing with the stock market. We can expect that the stock market is going to recover at some point. I can't predict when it's going to recover, but the stock market, the general market, is going to recover. Now the problem is the individual stocks that we own. Now we need to drill down into our portfolios and look at the individual stocks that we own. Some of the stocks were severely affected by the news on Friday. Some stocks were not that affected. Like in South Africa, if you look at Stadio actually went up on the day, so it wasn't affected. But if you look at stocks like City Lodge Hotel, it was affected. Also, I have a position on First Rand. That was my worst performing stock on Friday. Right, so if you look at individual stocks, you will see that they are not all affected equally. Some are less affected, some are not even affected, some are severely affected. And then when the general market starts to recover, they won't recover, the individual stocks won't recover at the same time or equal. Some of the individual stocks will recover quicker, some might recover slowly, and unfortunately some will not recover at all. If we look at what happened in the US last year, we saw that at some point the S&P 500 started to recover. Also the Nasdaq, the Dow Jones Industrial Complex, started to recover as well. Companies like Tesla, they just grow. I think at some point Tesla was trading, okay, I won't say below $200, but it's possible that it was trading below $200, but it grew from 200 all the way to $700. So that was a huge growth in a short period of time after that market meltdown. But there are some companies that have just been stagnant. Like you look at AT&T, they just didn't recover. Okay, Ford only started to recover this year. Not to say that Ford fell due to the coronavirus, but you're just looking at two automotive stocks, different automotive stocks: Tesla, electronic vehicles; Ford, normal cars. Well, they do have electronic cars, but it's just cars that still use fossil fuels, and I love fossil fuels. Right, so that's something that you have to keep in mind, that the stock market will recover. It's the stock market that always goes up. It's not necessarily individual stocks. We've seen cases where some companies they recover, some companies they don't recover, or some companies they just take forever to recover. Look at Steinhoff. It fell around 2017, 2018. It hasn't traded above 4 rand per share. This year we saw some good growth, but it's not coronavirus related, which is why I'm saying that whatever happened on Friday, it was a bit of a panic because the market was moving. Some stocks were very much alive, recovering nicely. Some companies were profitable. Like you look at the mining sector, they've been paying fat dividends. So then Friday happened. So now we're just gonna watch the market and see how it recovers. But do keep in mind, there's the general stock market and then there's the individual stock. You need to take a deeper look at your individual stocks. How is this thing is going to affect them, and how likely are those individual companies are going to recover, and then act based on that. It's up to you how you deal with your individual stocks, right? Which brings me to the second thing: follow your plan. You know why you bought those stocks. Whichever type of analysis that you did, whether you're a value investor or you did some fundamental analysis or you did technical analysis like I do, you have a plan. Your plan should tell you how to react when something happens. Fine. This coronavirus was an event risk. It just came out of nowhere. Fine, we do have coronavirus, but we're not expecting that the market. We've been having different variants from time to time. I can't really remember when was the last time we had a variant and how the market reacted, but what I remember is what happened in March 2020 and what happened recently. So yeah, it was just that thing that just came in as a shock and the market reacted the way it reacted. But go back to your plan. What is your plan? My plan is technical analysis. I look at the chart. I have an entry point. I have exit point, both for stop losses and for take profits. At this moment, my opinion is that the market is overreacting. Some stocks, the prices fell next to, and they went closer to my exit levels. But for now, at least for Friday, I haven't exited my stocks. I will see tomorrow morning how the Asian market performs, and then see how the Johannesburg market performs. Then if maybe the sell-off continues, then maybe I might be forced to pull a trigger and close some positions. But I don't expect the panic to continue. I expect it to be short-lived. But then again, I will go back and look at the individual stocks. One thing that I want to say is that I don't have leisure and travel stocks. I don't have hotels. I don't even think here in South Africa we still have flight companies. Okay, we still have Comair and other listed companies, but I don't have those leisure and travel stocks. So maybe if you have those, you may want to look at your portfolio, especially if there was going to be a lockdown. Maybe there won't be activity in that particular sector. But like I said, and I've been saying this for a while, I have a video there. I will leave the link in the description. I've been bullish on financials. Yes, financials were affected when I just went through on Twitter on Friday. There were some comments from other market participants. People were saying that there is panic in the financial sector because, number one, they're expecting that there will be more claims in the insurance space, and also the banks, maybe they are worried, the investors, those who invest in banks, they are worried that the interest rate can be cut, right? The insurance argument, it makes sense to me. I mean, if more people get sick, they use their medical aid, they're going to claim there. Unfortunately, some people do lose their life due to coronavirus, and then some people will have to claim from their insurers. But the interest rate argument, I'm not saying that it's incorrect. It doesn't make sense to me for people to panic that there's going to be an interest rate cut, because we just recently, the governor of the Reserve Bank just increased the interest rate. So I don't know when the MPC is sitting again. I don't even know whether they do have special sittings, but I don't expect that they're going to cut the interest rate now. Maybe on the next MPC, but now I don't see it happening. I mean, as a consumer, it would be nice for them to cut the interest rate, because it means that we can use some form of a credit to boost our investment. However you want to use credit. Remember, this is a financial education channel. We will never recommend that you do consumer credit. We do not support consumer credit, but the ball is in your court. Some people, they want to buy houses. Some people need to buy cars. So if you're looking for such things, then a lower interest rate will act in your best interest, no pun intended. So yeah, those are different arguments that are there. I do have a couple of financial stocks. Like I said, I'm bullish on financials. I'm bullish on the property stocks. Also, the property stocks, I only have one company in the real estate investment trust. I have redefined. I don't have many others. I do have One Vest Property ETF on my tax-free savings account. So I don't know how it's going to perform. I know that Growth Point hasn't been performing that well. So, and Growth Point is one of those large real estate investment trusts, but there's plenty of them. But as an individual stocks, I have redefined. So far, I'm not worried about it. The stop loss hasn't been triggered, and there's a dividend that is coming on the 6th of December. So, yeah, right. One last thing that I want to make a comment on is the US dollar, South African Rand exchange. You know, some of us, we invest in the US market, either via Easy Equities. There's USD account, there's also Australian account, but I'm not investing in the Australian market as yet, but I'm investing in the US dollar, in the US dollar account, and also I'm using eToro. So recently, the exchange rate it just jumped. Already it was high. At some point it was 15 rand 80 cent to the dollar, and then on Friday it just jumped. I think it went up to 16 rand 20 cent. So now it's a bit of a challenge to convert our rands to US dollar. The process is still the same. Nothing has changed. Whichever platform you're using, I'm using Standard Bank, Shift. It's still easy. It's just that now you think about you're going to get few dollars for your rands. Yeah, so that's one thing that I wanted to make a comment on, that as I'm trying to grow my US dollar account, that was a bit of a challenge. That panic selling, it just hit me on the currency exchange thing there, because that 16 rand 20, it's a bit higher. But if you know how to trade forex, the US dollar South African rand exchange rate, it's on an uptrend, meaning that the dollar is getting stronger and the rand is weakening. So it's either I convert my rands now, or I hope that it's going to be a bit of a pullback, coming back to 15 rand to the dollar. Otherwise, it's just going to continue to go up. Remember, at some point, it was 20 rands to the dollar. So if I don't convert it now at 16 rand 20-ish, in fact, changed my rands at 16 rand 40 cents. So wow, that was a large premium, but I converted it on the weekend, so I don't know what was the live price at that particular moment. So on Friday, if I look at the chart, it was 16 rand 20 something, but when I converted my rands yesterday, it was 16 rand 40. I don't even know how it's going to open when the Asian market opens tonight. I think it will open at midnight. So those are the things that I wanted to talk about. There is panic selling that is related to the coronavirus. The stock market is going to recover at some point, but look at your individual stocks, because that is where the rubber hits the road. The general market can recover, but some of your stocks may not recover. And always follow your plan. You need to know how to deal with anything that is happening. Event risk, something that will just pop out of the blue. You need to always manage risk so that you don't risk more than you can afford to lose, just in case there's a market meltdown. And then number 3 is just that sort of depressing US dollar South African rand exchange rate. So I don't know how you're going to deal with this short-term volatility. I'm interested in hearing how are you handling it. So please just comment there and tell me how your portfolio performed on Friday and how are you reacting to this. Are you planning to sell some stocks? Are you planning to buy the dip? And if you trade offshore US dollar, how are you dealing with the exchange rate, South African rand US dollar exchange rate? So that's it for today. We will see how the market is going to perform in the next coming days or coming weeks. I will see you in the next analysis. As always, if you enjoy this content, please subscribe, like, and share the video. I will see you on the next analysis.